welcome to TheoTrade. This is Don Kaufman. It's December 19th, 2019, and you are watching the TheoTrade evening video. Once again, we see the markets pressing higher and specifically towards the edge of the expected move inside of the SPX. This is something that I talked about, well, throughout the course of the weekend update. I talked about it on Tuesday night, and once again, it's all about the expected moves week in, week out. Here we have effectively a $46 move. Now that's a $46 move higher or a $46 move lower, and people were just driving right for the edge of it. Just to remind you, the upper edge, 32.15, and then stick a fork in us, we would be done. Nevertheless, tomorrow happens to be what they often call quadruple witching. And really it's just triple witching, but hey, listen, you have what? Index options, okay, futures expiring. Again, the index options and equity options all expiring. What does it mean in today's market? Not much. Not nearly what it meant 15 or 20 years ago. People, don't let that kind of hype get to you. There's a whole lot of arbitrage around, of course, this quadruple witching. Nevertheless, it's all algorithmic order flow, and it's not necessarily going to drive, okay, a huge amount of trade inside of the marketplace coming in, of course, to our holiday season. Now, again, the upper edge of the expected move, we are just a stone's throw off of it. Again, as I was saying, we've been talking about it incessantly, kind of week in and week out. But rather than actually discuss markets as a whole, you got to look at the financials in here, specifically, okay, sector by sector. The financials fading ever so slightly in the backdrop. So one of the interesting things, okay, and it's a dynamic that's changed today, is that the financials, they're kind of giving up a little bit of ground. Again, they've completely flattened out this entire week. Right now, we're actually seeing any movement to the upside, okay, being driven and sustained specifically by the monsters of tech. So again, the hottest of hot sectors, the financials, okay, are right now completely and utterly stalled out. What that tells us in the near term is the markets, they can kind of grind a little bit higher, okay? But a lot of that oomph for the upside is probably already kind of bled out of this marketplace. With that, let's take you really to the topic of tonight's video, and that's none other than, well, trade opportunities. They just keep a-coming inside of Tesla. We have done extremely well in Tesla as of late. Going back just a few weeks, we have been kind of barking almost about the fact that Tesla has an extraordinarily high probability of cracking into an all-time high. Here we are, all-time high in Tesla being hit today. Of course, I'll drop this back to even a 3-year chart. This is a line that was drawn on the screen a considerable period of time ago at right about that 390 price point. Nevertheless, the types of trades that we've done inside of Tesla, things that are working, okay, well, a variety of different trades. And I want to take you through it because, as I said, the trade opportunities kind of keep coming. You just kind of roll with the punches in here. One of the first trades that I looked at, okay, was a big time ratio back spread, which was done for a very, very mild debit. This is where we went out, okay, and we sold, okay, the 335 calls to buy 2, okay, of the 350 calls. And again, if you're not familiar with the ratio back spread, well, you get familiar with the ratio back spread. It's not that bad, but you do have to have solid criteria to do that. Again, what are you doing? You're selling 1 to go out there and finance 2. And as long as that stock rips higher and or lower, in this case we needed it higher, we used a ratio back spread, the call side, okay? You have to exceed all expectations to the upside, which is precisely what we did. We were able to close the 20-cent debit for an $11 credit. I don't care if you did 1 unit, doesn't really matter. I mean, we're talking about $1,100 on a 1 lot, people. Now, to follow that up, you know, people will look at this trade and they'll think to yourself like, Don, why did you guys bail out? Why'd you bail out of that back ratio? You had to, because I had the expiration that's literally coming up tomorrow. I had to bail out of it. And I had to bail out of it earlier this week because I didn't want to hit what is termed the valley of death. So what I did is I bailed out of it only to turn around, okay, and get myself into, okay, in-out spreads. And these were bullish in-out spreads. And I did it, okay, in two different ways. I used a $5 in-out spread here. That was the 377 half, 382 half for about a 250 debit. Then I turned around and also did a 250 wide spread for about a $1.25. Both of them closed out, okay, with strong profitability. Those of you that understand some of the criteria, you hold these things in 3 days. If you can make X amount in 3 days, you're out. You're out of the contest. Question is, do you want to go back to the well? Okay. One of the things that I look at now is, hey, listen, those the trades I just showed you, they're history. They're in the past. Either you were in them or you weren't. But looking forward now, okay, one of the things that's really striking is how, okay, wild the move has been outside of the norm. What you're looking at right now, and I'm actually going to close up this left side bar. This happens to be an auto expected move calculation, specifically on Tesla. That's what these lines are. They're weekly expected moves. Now, what it's displaying is, okay, these lines, yeah, that's what Tesla was supposed to move in a given week. Now, how does it know that? It knows that just simply because the option pricing. There's absolutely no directional bias. But I wanted you to see, it didn't just smoke the expected move. It absolutely crushed the expected move. Now, granted, this week ain't over, okay, but we're talking statistical significance like we haven't seen in too many underlyings in a very long time. I mean, this is almost Netflix kind of worthy for wildness to the upside or the downside, okay? At this point in time, listen, I have been bullish inside of Tesla. It's not that I want to get bearish, but I think we can probably step in the front of freight train over here and not get run over by placing, okay, a far out of the money call spread. Now, okay, most of the time you wouldn't want to go out and sell premium in low volatility. That's always the thinking, right? There's low volatility. I wouldn't want to go out there and sell some premium in there, okay? But why not? Seeing on a statistical basis how far and how fast this underlying has moved. Looking at the fact that the option volume in here is nothing less than monumental. This thing traded 2 times almost the norm for today versus the previous 5 days. Tesla traded 672,000 option contracts, right? So where can I go? One of the first things you better look out for, watch out. There's earnings out there, but the earnings are not until January 29th. I want to avoid it. I want to avoid it at all costs, right? So the furthest I could go out in time, the furthest possibility would be the 24th, okay, with about a 43% implied volatility. Now, again, I know that the implied volatility is inherently low for Tesla, but it's neither here nor there, okay? At this point, I think it's kind of tough to want to get let's get more bullish. Do we want to roll some of the profitability that way? I'd probably like to put a little bit of capital on the line, some of the capital that I've actually made. And I would actually prefer at this point, okay, to sell a little bit of out of the money premium. And again, I don't want you to think that this is getting, he's getting bearish, okay? It's a $5 wide call spread that I'm selling, okay? Just about 36 days out for a 95-cent credit. And I'm not trying to make a windfall profitability. All I'm trying to do at this point, we've had a lot of good trades in here. Just want to ice the cake a little bit, all right? But Tesla, it's moving so fast, okay, so hard that you step in the way of this thing, and I'm just going to hide all the positions. We're just going to look at this spread, okay? You step in the way of Tesla, and you could absolutely, I'm going to reset the slices here, you could get run over. And you need to recognize that when you were putting this trade on, delete a slice, when you were putting this trade on, okay, be fully aware. Right here, that's where Tesla's currently at. Could you lose? Okay, yes. And could you lose as much as what? Oh, just over what? That's a $5 wide spread. I could lose $5, which you collected 95 cents up front. So I'm going to lose out of pocket about $405. You could do this in an IRA, tax deferred. Do it any account you so choose, but you could get hit. You could take a hit. All right. My whole thought process is a very simple one. Even if Tesla goes up, okay, it's very likely that the volatility in even the 36-day options, it'll probably start to crush down, subside a little bit. Again, I'm comfortable with the strategy. I don't want you to think that I'm getting bearish, okay, per se inside of Tesla, okay? But anything for the most part under, again, anything under that, oh, 445 kind of turf is gold, and that's okay. Again, reminder, we're stepping in the way of a freight train. You're going to have to assume a little bit of pain possibly in the near term. If the stock crosses through 445, smile and laugh, people, because if you can't handle the risk, don't step up into this trade. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.